All right, Canada, we need to talk. So Trump announced new tariffs against Canada, and now the big banks are saying that this could actually lead to an interest rate cut once again from the Bank of Canada, which could be good news, am I right? I mean, isn't that what literally everybody has been waiting for? But before you get too excited, let's break this down because there is a catch. So if you have a mortgage renewal coming up in 2025, and let's face it, there's actually over 1 million Canadians in this position already, you're about to face a totally different mortgage environment than when you first signed. Interest rates are still much higher than they were in 2020, so even though there's going to be some relief with these new interest rate cuts, it won't return to those ultra low rates that we got used to during 2020 and 2022, where you were able to secure a low 2 or high 1% mortgage rate. I don't think. Time will only tell. And depending on where you live, this could impact you very differently, because what's happening in Ontario's housing market is not the same as what's happening here in Alberta, in our market, and definitely our economy. And speaking of Alberta, there has already been thousands of people already moving here to seek more affordability. So I just want to unpack exactly what this means for you and whether this latest development with Trump tariffs will actually help or hurt Canadians with this upcoming mortgage renewals, and what may happen to the housing market overall. Okay, so what's actually going on? Well, Trump's new tariffs against Canada are set to shake things up in a big way. Historically, tariffs like these tend to push inflation higher because they increase costs for businesses importing goods. And I know Trump's tariffs on us don't really cost us any money, but it lowers the demand for our product, as well as our government is already saying that they're going to retaliate against the US by imposing tariffs on things that we buy from them. But here's a twist. Major Canadian banks are predicting that the Bank of Canada could actually cut those interest rates by 0.75% in the next announcement to try to ease some of these economic concerns. Now, I know they're going to lower those interest rates to, ease some of those economic concerns. So if these tariffs slow down trade and weaken our economy, which they will most likely do, or even lead to job losses in certain industries like manufacturing in Toronto, the Bank of Canada might preemptively lower rates to keep the economy from sliding into a recession, or at least soften the blow. Now remember, we saw the same thing during COVID, when no one was actually allowed to even leave their house or go to work. And even though we all thought the economy would crash, interest rates were lowered and billions of dollars were pumped into the economy to keep things from crashing, which actually worked. The economy didn't crash. It did work. The housing market didn't crash, but it did lead to inflation, higher housing prices, and an increase in demand and higher prices for literally everything, including real estate, like I just mentioned. Now, this is where things get interesting for homeowners. So if you got a mortgage back in 2020 or 2021, the chances are you were probably locked into an interest rate of about 1.5% to 2.5%. Now fast forward to today, and the renewal rates are getting closer to 5% or even higher. Now that is a massive jump in payments, even with a 0.75% rate cut near on the horizon. So you're still looking at a much higher interest rate than you had before. And as of right now, you're likely at a 4.5 mortgage rate, if not even a low 5% interest rate. So now let's put these into some real numbers. So say you bought a home in 2020 and took out a $400,000 mortgage. Yes, that is still actually possible to do in Alberta. It might not have been in Ontario or Toronto at any point, but a $400,000 mortgage at 2% over 25 years, your monthly mortgage payment was probably about $1,700 a month. And now if you're renewing at 5.5%, your new payment could jump to $2,400 a month or more. And so that's an extra $700 per month, and that's before we talk about an increase in property tax, utilities, and just the overall cost of living. But I have talked about this before in other videos and other podcasts, as that $700 a month increase really sucks if you bought a home here in Lethbridge for $400,000. I mean, a $700 a month increase sucks no matter where you are. However, if you're a dual family income, it's probably most likely manageable. Like I said, it freaking sucks. Nobody wants to do that. But what I'm saying is you're probably not going to be foreclosing on your house anytime soon. You're going to be able to make it work. Whereas if you're from BC and Ontario and you bought a house for $1.2 million a couple years ago, and your renewal increase comes through, those monthly payments are going to go up by thousands of dollars. which is not going to be sustainable. I literally don't know how anybody is going to manage that, even with the dual income and you both are really high earners. So yeah, even if those rates do go down a bit, most people are going to be in for some serious sticker shock. So if your mortgage payment is about to jump in a big way and you're going to need some relief, financing is one of the options, and it's not one of the best options in my opinion, but it's an option. So let's talk about that. So by refinancing, you could lock in a lower interest rate if they drop further in 2025. And at the same time, you will be extending your amortization period. So instead of 20 years left, you could stretch it back out to 25 years or even 30 years. Now, by doing this, it's going to lower your monthly payment. I don't know if that monthly payment is going to be enough for people to want to refinance and still stay in their current home. Hopefully for most people it is, because nobody really wants to move if they don't have to. Now, the downside to this is that you're going to be paying way more interest over the life of your loan, and you're basically just resetting your mortgage and stretching out what mortgage you have left for even longer. And it's really going to delay the amount of time it takes you to actually pay off your mortgage if you're counting on that for your retirement. And speaking with real estate lawyers that I work with here in Lethbridge, Alberta, that seems to be a very popular option. But it's something that I personally just can't get on board with unless it's absolutely your last option. But at the end of the day, if your goal is to free up cash now, this could be a good move. Just be very careful. So option number 2 is to sell. So, and I'm not just saying this because I'm a realtor and I want people to sell. To me, I'm going to talk about this a bit later, but I always think that real estate should be a long-term investment and you should be holding it for the long term. But if you do need to sell and you've built up a lot of equity in your home and the new payments aren't sustainable, then selling might actually make the most sense. But of course, you're going to need to move somewhere, and you just have to move. You're going to have to live somewhere, right? So the next option is going to be to downsize or to downgrade, which no one likes to do, even though it could be necessary and probably a smart financial move. Now, in Alberta, where I'm from, we've already seen tens of thousands of Canadians move here from places like BC and Ontario over the past 4 years to escape crippling house prices in those other provinces. And I am curious if we are going to see more of that in the next coming years, and especially this year in 2025. You see, our average home price here in Lethbridge, Alberta is about $400,000. So when I talk about selling and making a move to someplace that's more affordable, even if it's not Lethbridge, by moving to one of these more affordable areas of the country, you might even be able to upgrade your home while still actually paying less for the property. And actually, about 80% of the buyers that I work with are from out of province right now, moving to Lethbridge. Again, with these mortgage renewals and a shaky economy and these added tariffs, I'm curious to see if this trend is going to continue. So if these tariffs hit the Ontario job market hard, which is very possible given that unemployment is already climbing and that the job market out there is highly reliant on manufacturing jobs, we could see another wave of people moving out west in search of better job security and cheaper housing. Selling could allow you to cash out before the market shifts, especially if demand slows in your area. However, that's also a double-edged sword, because if there is low demand, it could make it tougher to sell as well. But it is possible. Like I mentioned, I've helped a ton of families move here over the last 4 years. So it is possible, but over these next couple months, it could be more difficult. Just it depends how the market's going to react out there. So option number 3 is just to ride it out. And honestly, this probably isn't a bad option. I mean, especially if you have some extra cash or you have the funds to just hold on to your mortgage and maybe put up with those higher payments every month. I mean, after all, real estate is a waiting game. In my opinion, real estate investments should be purchased for a long-term hold. If interest rates are expected to keep dropping in 2025 and into 2026, then locking into a short-term fixed rate might be a smart strategy, or even a variable rate wouldn't be a horrible idea if you can handle some fluctuation. It's a risk for sure, but if you believe that rates are going to continue to fall, it could save you a ton of money over time. Now let's talk about how this could affect different parts of Canada. So again, if you're in Ontario, you already know that the economy has been slowing down. Unemployment is rising, and with these new tariffs, we could see even more job losses, especially in manufacturing and export industries. If the job market continues to weaken further, home prices in some areas might actually start to drop, or maybe we'll see a drop over the whole province, who's to say, which could make it harder for homeowners to sell at the price that they were expecting previously. In contrast, Alberta has been a magnet for those affordability seekers like I've mentioned. And I wouldn't be surprised if this trend continues into 2025. Wages here have remained relatively strong. There's plenty of job opportunities, and housing is much more affordable compared to Toronto and Vancouver. And our unemployment rate is some of the lowest in the country. And if we get a new government and they actually push for an industry that uses more of our resources and exploits those resources, we could see a booming economy within the next couple years. So what happens if interest rates drop? Well, Alberta's real estate market could actually start heating up again as more people move here. If that happens, prices could be on the rise in certain areas. And I mean, over the last 4 years, our markets here have been pretty hot, even when those Ontario and BC markets have started to soften a little bit. But I believe that our hot market here has been fueled mostly by this interprovincial migration. So what's the bottom line here? Well, these tariffs from Trump are shaking up things pretty dramatically, but they might actually work in favor of Canadian homeowners. At least in the short term, if these rates drop, it's going to be good news for everybody. That said, if your mortgage renewal is coming up, you need to start preparing now. If you're thinking about refinancing, start running your numbers and talk to a mortgage broker immediately. The sooner the better, in my opinion, even if your renewal is not coming up for 6, 8, 12 months. But if you do need a solid mortgage broker, be sure to reach down to me out in the comments, and I can hook you up with a couple options that are pretty solid. I'm not a mortgage broker, but I do have some good industry partners. So if selling is an option, then consider whether downsizing or moving within your area is worth it. Or perhaps do what so many other Canadians are doing and look for a more affordable area of the country to see if it's a better fit. And if that is the case, then it might be time to get in touch with a real estate agent to see how much your home is worth and how much it could sell for. I'm not even going to be the one helping you with the sale. So in the comments down below, don't even start talking about how I'm just trying to fuel my own industry. I'm not even going to benefit if you guys decide to sell in Ontario or BC. But if you plan to stay put, which again, I think is probably a good option if you can afford it, keep an eye on those rate trends and avoid locking into a high term rate if you don't have to. I mean, this is not my financial advice. This is just putting options out there. Again, you could look at a short-term, a 1-year mortgage, or even a variable mortgage that you can break at any time and then lock in later. But let me know in the comments, what's your mortgage situation? Are you renewing soon? And if so, what's your strategy? I'd love to hear from you guys down in the comments below just to see what everyone else is thinking out there. And if you're considering a move to Alberta, check out the links in the description below. I'll put a whole playlist of other videos right here. And if you guys like this video, be sure to smash that like button, subscribe for more real estate updates, and hit that bell so you guys never miss another one. And I'll see you guys in the next video.